Good morning all and welcome to today's video. So today I have two pairs on watch today. Those are dollar Swiss and pound dollar. So as always, I'm going to break them down for you now and tell you what I will be looking for today from these pairs. So with dollar Swiss, my favorite of the bunch, well, you can see we have a series of near misses up here. Okay, I talk often about how these near misses up here often get filled, but we also have a near miss here to this low here, which price failed to tap into last time around. And a lot of the time, the logic behind this is if we fail to tap into an area, if we get close but fail to tap into it, then there is likely still liquidity here, or this still remains a high area of value for a buy and for sellers to be getting out of their positions. Okay. And what makes me think that? So, although these near misses often get filled to the upside, it may be the case, especially when we're clearly in a run of momentum to the downside. You can see we broke above this high here, broke back beneath it, and we are clearly in a run of momentum to the downside to potentially take out this low and this low first before potentially moving to the upside afterwards. This is the picture as I see it, moving to the upside afterwards to take out this high here, because within that we have what we call a middle section. We have a kind of 1, 2, 3 middle section. Okay, so if we did get a move to the downside to take out this low that we near missed to last time around, that would give us that completed kind of 1, 2, 3 structure that we look for before that potential move to the upside. Obviously that's a more longer term projection, but that is the theory at the moment as I see it. You can see we are getting a lot of momentum to the upside at the moment, and I am mindful of that, and I shall discuss that in a minute. But as I drill down, you can see that we have this 1, 2, 3 touch structure which breaks above this liquidity point. I talk often about how on the higher time frames we often need to break above a liquidity point before a move to the downside to essentially catch people the wrong side of the market. We don't really do that so much in this instance. We only kind of just break slightly above, but the majority of the time we break above a high if we're going to move to the downside versus just tapping into it. And you can see evidence of that here because we have this 1, 2, 3 touch structure which literally just tags this area, but then we scoot back down, scoot back round, scoot back up, break the high, and then we move to the downside. So we have this expanding pattern. This is a completed piece of structure, this 1, 2, 3, because we have this 1, 2, 3 middle section within it before pushing up to the third touch. Okay, and then we push down, and then we've got the same thing happening on the lower degree. As I drill down, you will see that more clearly. So when we have patterns within patterns, that increases the likelihood of price playing out in our forecasted direction. And what I mean by that is if we just drill down, you can see that we have the same psychology. Again, you could have that plotted here, but essentially we have that 1, 2, 3 expanding pattern again. So where we get higher highs in this instance and lower lows, that is an expanding pattern. Okay, and you can see that here we have higher highs and lower lows, and within that, what do we have again? We have that 1, 2, 3 middle section. Now I am mindful of how much price has pulled back relative to this move down. So we have an impulse correction potential continuation, and we have pulled back. If we just measure this with the Fibonacci tool, we have pulled back now just about 60% of this move down. Okay, now what I have noticed, typically speaking, our kind of line in the sand is kind of 50%, within the 50% region. However, what I have personally observed in the 4.5 years that I've been trading is that more corrective pairs, such as Swiss pairs, tend to pull back up to about 60% of the move. I've noticed that with pairs like Aussie, Kiwi, and a few other corrective pairs such as CAD Swiss. There's quite a few of them, but I've noticed that they typically pull back 60% of the move before moving to the downside. Okay, so that doesn't put me off too much because that's something I've seen in the past. Okay, however, it's clear, you can clearly see from the daily chart, if we just zoom back out, and from the weekly chart, that we clearly do have momentum to the upside. So I am mindful of that. So with that in mind, if I just drill down a little bit, okay, we also have, if I just look at this on the 15-minute chart, Okay, we also have this sharp point here. I often talk about how that can be where the liquidity is sat. Okay, so why is that important? That's important because what we could be seeing, because of the momentum on the, before I drill down, we could be seeing something like this, particularly with this wick here. Okay, just pay attention to this a second. We could be seeing something like this, where this becomes a middle section. We push back down to tap into that low there, and then this becomes a bull flag to push higher. So these are important things that have taken me quite a while to learn to see. But if we had that, then we would have this 1, 2, 3 touch structure, which taps into the hook point. Excuse me. This becomes the near miss, and then we have a kind of bull flag to push higher. Okay, so how do we negate the possibility? If I'm looking to get short, I ask myself, how do I negate the possibility of that happening? Okay, well, quite simple. What we do is, if I just unhide the forecast, I'm just going to move this over ever so slightly. If we just move this forecast over, put that guy back in his box. If we get a break below, if price impulse is down below the wick below, so this wick here, then I'll look to be getting short with either a reduced risk entry on the break of the flag or a risk entry within it, because then that will have negated the possibility of this turning into what I just showed you a second ago. That will have negated the possibility for that. Okay, so if we correct below this low, that gives me a clue that there was not enough liquidity at this sharp area, this sharp move. Okay, there was not enough liquidity there to send price to the upside. So the correction afterwards would give me that clue that there was not enough liquidity there to push price to the upside. And typically speaking, as I've mentioned in the past, the correction is typically the banks and the bigger players stacking their orders for the next wave lower, if that was to occur. So what I've done is I've put an alert just above this wick here. If we push down to that area, then what I will do is I will set a Google Calendar reminder to remind me, because of course we don't often know where the flag will occur. It may occur here, it may occur slightly lower down. So I've set a Google Calendar reminder to remind me, or I will do rather, if that alert is triggered, I will set a Google Calendar reminder to remind me to check this periodically, so maybe every hour, to see if we get that correction afterwards, and then I would look to get short, and then I would be able to manage this down to this first inflection point, where you can see we kind of have this kind of 1, 2, 3 there, this piece of structure here with that kind of middle section within it, which just so happened to kind of retest the back of this. Okay, I'll be able to manage that down to that first inflection point for something in the region of 4.5%. Okay, and obviously the next target would be down here, the low of this structure, the low of this expanding pattern, which offers a decent risk to reward. And then, of course, if we were to take out the low of this larger expanding pattern, then I don't think you need me to drag the risk to reward tool down for you to be able to see that there is a lot of risk to reward on the table. So that is dollar Swiss. Of course, if price continues to push up, then I will just not be looking at this trade, because if we do start to push up, if we just measure that again with the Fibonacci tool, if we do start to push up into these regions here, up here, then it is more likely the case that we will be pushing all the way back up to test this high. So I shall just take this off of watch, unless we form some kind of larger structure up here, which indicates we're pushing up there. I'll not be looking to play, not be interested in this pair, and I shall just simply take it off of watch. But that is dollar Swiss. That is my thought process on that pair. I'm going to leave this forecast on the chart, so I'm just going to move it over ever so slightly, so that if an entry shapes up, I have enough room to put another risk to reward tool on the chart so for the actual entry itself. So that is dollar Swiss. Moving on to pound dollar. So on pound dollar, if I just drill out to the weekly chart, you can see here, if I just zoom to the left, we have broken the all-time low, which was here. and we did so by way of this 1, 2, 3 touch structure. I can go into slightly more detail because I've only got 2 pairs on watch today. We have this kind of 1, 2, 3 structure there. We have this 1, 2, 3 middle section. We also have a near miss. So price here, near misses this area here. I just talked about a moment ago how we often take out these near misses. So we have a completed 1, 2, 3 touch structure, which well and truly catches people the wrong side of the market. It breaks below this low. People believe that this is now resistance because we've broken below, and everybody gets caught massively. Well, not everybody, but a load of people get caught the wrong side of the market before price just smashes back above it. Okay. And then after that, we have this, you can see we have this impulse correction continuation. Okay. And then we go into this kind of, so price has no reason to come all the way back down here to these lows at this moment in time. So I'm just kind of seeing this as an impulse correction continuation to potentially take out this near miss and this high that we near missed to last time around. And if we to measure that price is in this area at the moment, if I just drill down, you can see that we have a completed piece of structure here. We have this completed piece of structure here. We have this, you would see this more clearly on the lower time frames, but we have this kind of middle section here. Price comes back down, we tag the low, and then we push up. So price at this moment in time has no business moving all the way back down to this lows because these lows, because this is a completed piece of structure. But what we do have, okay, if I'm just going to zoom out ever so slightly. What we could be seeing, if I just measure this impulse here, and take it to where I would be looking for price to move down to, that would, so if this was an impulse correction continuation, that would take us up to these highs to take out that high that I was talking about, okay, that I just mentioned a moment ago. But in the meantime, we could be looking for a short-term move to the downside. So although price has no business coming all the way back down to test the low of this structure again, notice here that there is a sharp hook point, okay? There is a sharp move down followed by a sharp move up, which indicates that there may still be liquidity in this area, which price may tap into before that move to the upside. And one of the reasons that makes me think that is because if you look, price was moving down and down and down. We had a near miss to this sharp area of value, and then price has moved back down, okay? Suggesting that it's likely to take out this near miss and this area of value that it near missed to last time around before potentially pushing to the upside, okay? And as we drill down to the lower time frames, that thesis becomes clearer because we have this one. I'm not so concerned about the first touch, but we have this 1, 2, 3 touch structure which taps into this what would have been the area of value at the time. You can see here, if we just pattern separate a little bit, we can kind of separate this structure here with this. You can see this 1, 2, 3. And we have the middle section after the second touch, which gives me a clue that this is a completed piece of structure. And then, of course, we push down, as we often do after a completed piece of structure. We then have this move here. We have this area of liquidity, which just so happens to test the previous low. Okay, price comes down. It comes all the way back up in the form of a 1, 2, 3, which just so happens to have a middle section after the second touch. So that gives me a clue that this is a completed piece of structure. And then, of course, we push down. Okay, so we see these patterns repeat themselves over and over again. What happens here? We have a move down. We have an impulse correction continuation. Okay, we have this hook point. We have this sharp move up followed by a sharp move down, giving me a clue that this is likely where the liquidity is sat. What happens? We come back up, we near miss to this area, giving me a clue that the liquidity is still there because we didn't quite tap into it. We then have this middle section that I talked about. And I said at the time that I thought price would likely push a bit higher. That's a terrible drawing. Let's draw that again. I said that price would likely push a bit higher before breaking back in, if it did break above, for the simple reason because we'd built up a lot of volume within this kind of impulse correction continuation. And when we build up a lot of volume within the middle section, what happens is we often break out by a similar amount to the height of the middle section itself. So if we measure the middle section. So all I'm doing here is measuring the low of this structure to the high of it, this middle section. And then if we take that measurement, take it from the break, that takes us up to this region, which is why that we likely broke above before by some distance before breaking back in. I've said previously that on the lower time frames we typically don't do this so much, break above before breaking back in, certainly not by this amount, but sometimes we will if the middle section within the piece of structure is very voluminous. Okay, so we break above, we break back in, and then we have the same psychology again. We have that hook point, we move down, we near miss to that area, we come back down, we near miss to that area again, and we have within that we have this 1, 2, 3 middle section before price pushes up to the third touch and then pushes down. But notice that it didn't carry on to the downside. So this is essentially a failed structure. Now the next question I ask myself is, why did it fail? Well, it failed because if you look after the third touch, we didn't tap into where there was likely a lot of liquidity. Okay, this sharp hook point there. So what happens? Price then comes, but it tries to move, but it can't move to the downside because there's still liquidity sat in this area which price needs to take out before potentially moving to the downside. Okay, so although this is a completed structure, it's a failed one, and failed most likely because it failed to tap into that area. So I'm just seeing this as a break above to wash out all the orders, a push back down, and then if we look on the 15-minute chart, we can see the same psychology repeating itself again. Okay, we have this, what do we have here? We have this, if I just put the ray line on, that might be more helpful. What happens here? We have this sharp move up followed by a sharp move down, and I'm just seeing this. We then have a near miss. Notice we near miss to that area, giving me a clue that there's likely still liquidity there, which needs to be filled before price can move to the downside, which is why it's moving down in a very corrective manner. One of the reasons price moves down in a very corrective manner when we have a near miss is because some people are trying to sell this whilst there's still liquidity here, dragging price up. So then you get this kind of movement, this corrective movement. Okay, and there are likely still orders being placed at that area because we didn't tap into it, which caused this kind of corrective move. So what I'm anticipating is that this is just the middle section within a move back up to tap into and potentially break this high before that move to the downside to potentially take out that near miss there that I was talking about and tap into that sharp hook point on the 4-hour chart, I believe it was. So that is the thesis. Okay, so what I've done here is because we lack a little bit of depth here, so this looks like an incomplete middle section to me. I'll be looking for price to push down a little bit more before pushing up, because then if we just measure the impulse correction continuation, so this impulse correction continuation, that would mean, so if we had an impulse correction continuation and we push down a bit more, the continuation leg out of that would kind of line up with here. Whereas at the moment, if we were to push up from where we were, that would take us all the way up to here, which looks a bit disproportionate, okay, at this moment in time. And then we would have if I just do something very quickly because we're running out of time, then we would have an impulse correction continuation within a potential impulse correction continuation, and within all of that we would have that impulse correction continuation middle section, which would give me a clue that we were very, very likely indeed to move from this area if we completed as I've just illustrated. So if we did, then I would look for a risk entry within this flag, and I would be able to manage it down to this low, this first low. If we just measure this structure here, measure this impulse, and we assume that the continuation leg out of this correction would be of a similar length, that would take us down to this low and down to the low of that structure, and I would be able to manage that for something in the region of 5%. So I hope you've enjoyed this video. I hope it's provided you with some value, and of course, if I place a trade on either of these pairs, then I will update you accordingly in the next video. Thanks for watching, folks, and I will be back in that next video. I hope you have a great day, and I'll speak to you again soon.